Yep.
Hello, everybody. Welcome to the Trader Merlin Show. It is your Monday edition, and as Walter says, it should be a good show today. I'm going to have you redact that one, Walter. It's going to be a great show today. I'm really excited to have our guest on here in just a second. But before I do that, as you guys know, I screw up all the time, and when I do, I am actually fine if people call me out on it. Now, when I was trading back in the late 90s and 2000s, multiple times I have sat with compliance departments about what the pattern day trading rule is. And I was told, quote, even these are people from the freaking NASDAQ, that it was 4 round-trip trades in a 5-day period. And so I got this email from Kevin, and I wanted to bring this one up because Kevin said, Kevin Martinez Rivera, thank you for all the support. And yes, I appreciate you calling me out because I'll read it. He says, sorry, Merlin, but I thought a pattern day trading is a round trip on the same day. So holding overnight would actually be the only way to stay away. So you can swing trade as many as you'd like, but once you run the risk of having several trades that hit at once and stopped out, and then being stuck with one that can't be executed due to pattern day trading rule, is now you're caught in a big loss. What's interesting is I actually went through and checked the verbiage in the pattern day trading rule, and I swear I have been misinformed by the highest powers of compliance departments. It does say it has 4 day trades in a 5-day period. So Kevin, thank you so much for correcting me and fixing that one. I hate making mistakes, but I'm cool when we get called out on them. So here's what we're going to discuss today. Lee said this question a couple days ago, kind of right as natural gas was starting to sell off a little bit. Lee says, can we look at natural gas coming into demand? Well, let's bring up natural gas insanity. My guest joining me from the East Coast today, we have Mr. John Rowland joining us. John, good to see you. How you been?
Hello, Merlin.
Oh, look at that. Well, I like the explosive background. I guess that kind of has to do with natural gas and everything. We're firing on all cylinders. So how you been?
Good. Doing well, my friend. How are you doing?
Any better, I'd be twins. I was excited to finally get you back on the show because I think last time we had you on, you were talking about natural gas and saying how you thought, we're going to start to see it rise up here because of a whole list of factors. You guys can check out the last time John was on the show. And I'll bring up the chart of natural gas for anybody who may have missed this thing. It's been nothing but up except literally the last 4 days since, I believe, April. Let's go, all the way back to April. If you go to April to where we are today, it's up about, let's just say 170%. And we're down about 18% just in the last 4 trading sessions. So this thing is wild. It almost looks like that crazy lumber chart that we saw. And I don't know if I have the lumber chart here. Check the lumber one out, guys. Remember when lumber went absolutely parabolic and came crashing back down? Might we see the similar situation for natural gas? So here to help me explain how the heck this is happening and what on earth is going on, John Rowland is here today. Woohoo!
Whoa, with that introduction, oh my gosh.
Setting the stage for it, man. Wouldn't it be great if every day someone introduced it like that on the trading floors on the NYMEX?
Right. Or just walking into Starbucks, right? That'd be cool, right?
Here's his coffee. It's a grande mocha with frappuccino. All right.
Well, listen, I think it was back in April or
It's been months.
I think it was in the springtime when I was on and laid out, basically the scenario that had come to play that global inventories had fallen in Europe and in Asia and even here in the U.S. and that because of COVID and shut-ins and lack of capital expenditure from a lot of companies, that there could be a production crunch moving forward this year, and boy, did we see that, right? Not only here in the U.S., but in places like Europe and Asia where the price of their natural gas you think our natural gas prices has gone parabolic. I don't know if you have an opportunity. Can you pull up that TTF chart of the Dutch natural gas market?
Give me just a second. I'm fixing. I made a boo-boo on my monitor, so we're good. Yes, I will bring that up. You wanted which one?
The TTF, that's the Dutch internet.
Yeah. Oh, wow. So it's funny, I had it all set up. I guess it must have been a different profile. What was it? It was a $sign TTF?
Yeah, check. Depends on every platform.
There you go. I got it. Yeah, for some reason I had it on a different account, but here you go. This is the Dutch TTF natural gas calendar month futures. So there we go. Beautiful sell-off the last 4 days, but what's this telling us over the long haul?
Right, exactly. All right, so let's do a little quick history. So during the 70s, or excuse me, during the 90s, when I first came into the natural gas market, our U.S. market was a domestic market, which what that means is that all of our production and our consumption was done inside of the U.S. or North America. And then back then, the natural gas market was what we would call a demand-driven market, right? There was a fine balance between the supply that we had and the demand of natural gas. And in years when we had cold winters, natural gas prices would spike. And then in the summertime or spring and summertime, as we replenish our inventories, the market would catch up and prices would fall back down. Well, we come around to 2005, 2006, and the advent of fracking. And fracking brought about a mega change in the natural gas market, where we went from a demand-driven market to a supply-driven market, right? Because every day we're bringing on new and new supply, and you can see that probably from I'm looking at my notes here. From about 2008, summer 2008, you can see that natural gas prices. Go ahead and put like a long-term natural gas price chart up.
Okay.
It has been in a decline, and not only has it been in a decline, but since about 2010, when fracking peaked, we've been kind of stuck in a range between, on the low end, maybe 150 or so, but kind of between $2 and $4, even with a couple little minor spikes for really cold winters. So we've been kind of stuck in that range. And now what's happened was during that time, and this is what you got to give some industry leaders like Cheniere, LNG, the stock, is they were saying to themselves, well, our domestic natural gas price here is stuck around $2 or $3. Wouldn't it be cool if we could pipe our natural gas to places like Europe and Asia, where their natural gas prices were back then, maybe $8 or $10, or in Europe and in Asia, $12 to $15, right? Wouldn't it be a great way to do that? And Cheniere figured out, it's like, hey, yeah, we can do that. We can do something called LNG, liquid natural gas. And you got to give these folks credit, because the infrastructure to take our domestic natural gas, liquefy it in a factory, or basically what they call a train, and then pipe it in, pipe it out, put it in ships. They had to actually build ships, liquid natural gas ships. I mean, I don't know if you've ever seen them. These
Right,
things
they're huge, big giant bubbles,
huge.
yeah.
Yeah, big giant bubbles. And the billions of dollars that they committed on this whim that we were going to have cheap domestic natural gas. And so what happened is that as these LNG factories came online, our little domestic natural gas market, where we had plenty of cheap natural gas, now is linked to the global markets. And what has happened in the short run, what we're seeing is happening today, is that even though things are kind of normal here in the U.S., although production is a little bit down, that excess production that had been around for the last decade is being slowly consumed by the LNG market, and is being transferred to on the global stage to Asia and to Europe. And so what we're seeing is a dynamic change in our domestic market, and it being linked to the global market.
Well, you say with all the increased demand, but haven't we seen in production, seriously increase? It seems like right now we're one of the leaders in the world with regards to production in LNG. So, I mean, we do have spiking demand, but that has been offset with increased supply, correct?
The increased supply has grown over the last few years, last decade with fracking, but since about 2018, 2019, because natural gas prices had gotten so cheap because of the abundance of fracking, a lot of capital expenditure has slowed down, and that actually what we're seeing is a lack of Did I lose you?
No, you got me. Sorry, I was yelling at the dog.
Get out.
Yeah, pretty much.
Yeah, we're seeing a lack of new fracking. What most folks don't realize is that a frack well peaks like the moment they start pumping out of it. It deteriorates. Or there's a diminishing returns over a period of time, and unless they're fracking more and more wells, eventually a lot of the wells that have been fracked over in the last 10 years are depleted,
right,
or they're not producing at a very high volume. So even though there's a lot of wells and there's production, the production has been falling. So we got this perfect storm. We've got huge demand around the global basis. We've got all of these new LNG factories that are here in the U.S. that are taking any access, but they've created a monster now. It's like, 5 years ago, the LNG market maybe took 1 BCF off the grid a day. Now it's up to about 10 BCFs. I mean, we're talking tenfold in about 5 years' time. Well, let's talk about in terms of seasonality of natural gas. During the summertime, the only time we really use gas is for power burns, for electricity. But most of the time what we're seeing is gas comes out of the ground and goes into storage. In the wintertime, we have incremental demand rises as home heating and other things that are going on related to the weather drives down. So like in a normal winter week, we will draw about 100 BCFs from storage. So that's a week. 7 days goes into 100. What's that, about 15 BCF a day? LNG production is now 10 BCFs a day. That means that what we're seeing every day is one normal week in the winter season. Mm-hmm. Does that make sense?
No. I mean, it makes sense to me, but it seems like huge numbers.
It is a huge number. That's the monster that low natural gas prices over the last decade has created. And so what has happened is they're crowding out everybody else. Mm-hmm. Now, in the reality of the market is that your local distributing company, your utility, cannot be short. So what happens is that you get these crazy spikes in locations around, the U.S. Last year, I think it was, even like up in state New York, we had natural gas prices spiked up to about $100 BCF in a very small location. Mm-hmm. But if we have shortages like we're seeing in Europe or in Asia, then we could see the same kind of crazy price action that we've seen in those areas of the world here in the U.S. Now, go back and to look at that long-term natural gas chart, and you can see that there are spikes back when we were more of a demand-driven market. 2000, we got up to about $16. $10. 2005, we got close to $16. 2008, we got above $13. Mm-hmm. So the whole dynamics of the natural gas market has changed in terms of this global sense. But think about it. Here we are. We're starting at $6 or $5.50 where we're currently at right now, and we haven't even gotten in to the winter season. And if we get a cold winter, just a normal cold winter, I would not be surprised to see natural gas prices spike up to like $8. And if you look at natural gas prices between 2003 and 2008, and the onset of fracking, just before fracking really became prevalent, you can see that natural gas prices stayed in kind of a range between $4.50 to about $8 on the high end. So really right now what we're seeing is that we've gone from a supply side market to a demand side market, and we're really kind of normal on a historical basis. Can you see that?
Yeah. And when I'm looking at the charts, it's funny because, this is one of those things where if I look at a price chart of a stock and you see someone that goes, oh, well, it was, $300 5 years ago, and it's going to rally back up because it's currently trading at $1, right? And they go, oh, it's going to be $300 again here soon. You go, usually you're like, no, that was a one-off period of time. It'll probably never see $300 again. But with commodities, it's a bit different. Obviously, we have maybe some new technologies, things have changed and made us, much more of a producer. But when you look back at those levels you mentioned, and I think that's always why it's important to look at long-term charts. That peak from 2008, which is probably the most recent serious spike, that was up above 13. What would it take to get us to something like that? That would have to be just a complete freeze out of the East Coast.
Yeah, I think it wouldn't be that. It wouldn't have to be like a polar vortex like we've seen in banks. I think just a normal, week in and week out demand for natural gas here domestically, on top of what's going on in Europe and what's going on in Asia. If they have the same kind of weather they had last year, or just the fact that their supplies are not nearly at the levels that they want them to be. For instance, I think in Europe their capacity is about 75% of what they can pull in, and on a normal year they draw down somewhere between there's my phone. They draw down about 50 to 60% a year. So we're talking about if they just have a normal year, they're going to draw down to the bottom of the barrel. So there's a lot of fear in the market. Now, what has happened in the short term here, really, let's be honest with, is this was an anticipation of what is going on. This is kind of what I said to you back in April, the anticipation and players have gotten in position. But this last little blow off, I really believe, is more of about a short squeeze in the market. And so I think what we're seeing in the short run here is that short squeeze. Now that short squeeze, we've gotten those folks out, and now the market's come back to more of a realistic level. So I think we're going to stabilize around here for a little bit. Somewhere's, I think, on the low end, maybe around $4.80, $5, and high end $6. I think will be good resistance. But if we can get back above $6.50 in spot prices for natural gas here in the U.S., then I think we're on our way to $8 and maybe ultimately to as high as $10 or $11 for sure.
Wow. Well, anything is possible, it's especially when you look at commodities and some of the manipulation. Talk to me a little about the short squeeze, because this has been a topic that people have been asking about. What was the whole short squeeze about? Was there really that much short interest? I don't look at the Commitment of Traders report, so I really wasn't checking it out. But was it that high of a short interest to warrant such a big pop?
I think some of the larger trading desks, commodity trading desks around the world, especially, places like in Europe, where the regulations aren't as stringent as they are here in the U.S. I think there has been a lot of folks that didn't believe the story, or at least they were like, oh, at 20, if the TTF was got at the 20, so it's, this is a historical high level. It can't go any higher, right? Well, sure, it runs up to 50, So I think, there was a significant short squeeze in some of these market makers in Europe and in Asia. I think they basically got caught with their pants down, literally. So, yeah. And I heard, rumors about some of these trade desks. They had to go to, their banks and require $1 billion credit line or a $3 billion credit line. We're not talking about little money. We're talking about some crazy numbers, Yeah,
so, that's just preventing systemic failure for numbers.
Exactly, yeah.
With that, because I'm sure other people are thinking this, when you look at the short interest, with equities, it's easy. You can go just pull up the short interest and there's little float numbers. Is Commitment of Traders predominantly the way that you would find that information and then just kind of just check and see if something is heavily on the short side?
Yeah, I would look at Commitment Administrators to look to see what our producers are doing. But, you got to remember, a short interest, there's also a long interest. So, you got to do a little bit of diligence in it. And what you might see is on that producer commercial side of the Commitment Traders, you might actually see that they're long because most of the smart money is already in the market, and they're on the long side, right? If you look at open interest in terms of the futures market, and this is the kind of thing that I said to you back in the spring, is that there was the open interest was starting to really build in the winter months, the November, December, January, February, March of this year months, and that open interest has actually stabilized. It hasn't really been rising. So, I kind of, that's why I'm kind of feeling that we've kind of made our bed here domestically, and we just need weather to dictate what is going to be the next leg. Is it going to be up or is it going to be down? And I still believe that as long as the LNG factories are pumping at full blast because of what is going on in Europe and in Asia, then that will be supported. There will always be a bottom to the market, and they'll always find a bid, and that we just need some weather to really get this thing to really get going. I know you're saying, well, we're up 140% already
Right.
today, but I think it's just the market stabilizing because we're not a domestic market anymore. We're a global market, which is kind of if you think about it in terms of what folks will say, oh well, we fracked for energy independence, and if people really knew that 10 BCFs a day of an 80 BCF production U.S. wide, or an eighth of our production, is going to foreign markets, I think folks would have a little bit of different opinion.
Yeah, absolutely. Well, it is interesting to check out those charts. I mean, a lot of people have been commenting on how high it's gone and what the potential is for it to keep moving up. And I'm a practitioner of the trend is the friend of the bend at the end. And while we may have had a small little slight bend here recently, I'll bring up just the daily charts so you guys can see how quick it sold off over the past few days. That's still an uptrend by any definition. We're kind of at an interesting point right now. Maybe we get down to about that 480 mark. That's kind of the bottom end where I think demand might start to step in. A good question coming from Margaret. She said, John, do you think that supply and demand zones work well for natural gas? Are you do you apply supply and demand as that, or are you going off of different items?
I do. I like it, but I would say, again, natural gas is one of the weirder markets out there. But let's just put it this way. Back in the day, we called it Gas Vegas, right? So it has a lot of volatility. I think volatility for natural gas just got up to like 140. I mean, you're talking about like a GameStop, kind of volatility. When you look at most commodity markets, volatilities, they get in the 30, 40, maybe 50 at the high end. But when you talk about 150 vol, that's huge. So, but to go back to the supply and demand, I really believe that in natural gas, you got to use a higher time frame. So in other words, even if you're a day trader, 4 hours, dailies, I'm a big fan on weekly supply and demand zones, because, every week we have those inventory reports. So, you kind of, you set the ground for the following week based on that inventory report, and those zones that are being created, on Thursday for the inventory number, and on Mondays, I think, supply and demand wise, kind of Monday sets the trend for the market. So that would be the advice I'd give you. Stay in a higher time frame and look at the ones that are being created on Mondays and Thursdays.
All right, there you go. With regards to natural gas, obviously, futures is probably the best way to play it, but there certainly are a lot of individual securities out there. I see Mike was saying, what's the best LNG stock to invest in to take advantage of the price increase? Now, before we read any names here, I just want to be careful, Mike, that or anybody that's thinking about it, it does look promising and the trend is still up, but just make sure you have stop losses in place, because when you have commodities like natural gas, those volatility swings can be huge, and I think it's been exemplified by wheat, by corn, by soybeans, by lumber, and now you're seeing with natural gas too. So just make sure the stops are a little bit different than I think you would normally get. Which what do you like to look at for a natural gas play, maybe for companies? I know we have UNG, which is an ETF,
yeah, I'm not a big fan in a lot of these ETFs for other reasons, for backwardations, for contango issues and stuff like that. But as far as equities, and full disclosure, the ones that I'm going to mention are that I'm either actively trading or I could have a position in, like the aforementioned LNG. I think Cheniere has just done a great job, and if you look at comparison of natural gas prices and LNG, there's very high correlation. Now, in recent weeks, though, what we've seen in the energy market, I think, is becoming an overcrowded
Mm-hmm.
play. There's a lot of money flowing into the energy sector, and so LNG got above, $100 there, and yet natural gas prices have backed off. Now, some people would say, well, that might be bearish for LNG stock, but let's think about it. If their feedstock price, our domestic price falls back down, and they're still selling it, across the seas for $40,
Yeah, right.
right? They're still making a boatload of money, right? Um, I remember a story one time. I was talking to an oil producer, and up until like the 90s, natural gas was an afterthought. They just burned that off. They drilled an oil well and they burned it off. And so he said to me, it was a great line. It was like, he goes, natural gas, this thing is great. It's like being a dog walker and getting paid for my poop bags.
That's a good one.
So here's a byproduct that for a long time that the market just didn't think about, and now it's now driving what's going on. And I think that's what's really spilling over into the oil market, is because natural gas prices have gotten too expensive. There's this cost benefit to switch to other alternative fossil fuels, crude oil being one, and coal. I know a few years ago were a big coal advocate. I think right now the market is perfect for the coal market. So, you can look at those industries as well. Now,
By the way, I was only really a coal advocate because, well, and that was 2016 when the Trump administration was coming on board, and he was very clear. He's like, I'm bringing coal back. I'm going to go
right.
clean coal, which of course is the ultimate oxymoron. Clean coal is that's like healthy Coca-Cola, and just pretty sure that's not going to work. But yeah, that was the only reason I don't want to be bullish on coal, just because I think it's bad for the environment. But whatever.
Well,
I think
agreed. But I mean, it's been way undervalued, and now there's demand for it. But unfortunately, because of prior administrations, a lot of coal factories have been mothballed. But anyways, so going to other equities markets. So if you wanted to play, again, like I said, I think the energy sector, like the EOGs and the Williams and the Diamonds and the Devons, the ones that you see every day, Jim Cramer and all the other ones that are pumping all the time. Those ones have already made some huge runs. ConocoPhillips, big movement in the last. So if you wanted a domestic stock that would benefit from natural gas prices, EQT, which is the largest Marshall producer, and they just did a deal recently with Chevron to take over a large swath of their some of their properties, and I think they've suffered from some issues from cheap prices and some bad hedging and that kind of thing. But I think moving forward, if you wanted to play a domestic natural gas producer, that would be one. Now, this one, if you look at this one and compare it to natural gas prices, for instance, natural gas is down, 4 or 5% today, and so is the stock. So it has a high correlation, as you said, a high volatility based on the natural gas price. Now, if you wanted to go for more of a conservative play and maybe go outside of the U.S., outside of, let's say, back into Europe, where this major problem is, there's the Russian, was it
Gazprom,
right? So you could play that, but the second largest natural gas producer is the old Statoil, the Norwegian oil company, the state-owned Norwegian company, and I think that symbol is EQNR. And
is that Equinor? Equinor?
Yeah, I think that's what it is.
It's actually it's actually traded in the U.S. So
yeah, it is. Yeah, isn't it an ADR maybe?
Yep.
Yeah. So this one, this is the second largest player in Europe, and again, here's another stock that was beaten down because of this global green initiative, and in Norway, they're going to alternative fuels, wind and things like that. and they're not really drilling a lot of new wells in the North Sea, but the wells that are producing are still producing, and makes them the second largest producer of natural gas in Europe. So I think they will benefit over a long period of time, because I don't think this problem with Europe is going to go away in one season, right? It might take a couple of years to get back to stabilized prices. And that doesn't mean we're going to stay up in these super high stratosphere prices that we're seeing now. But even if we just maintain in, let's say, the teens to the 20s, I think this stock will do well over that period of time for the next, 3 to 5 years.
Here's a couple of charts to kind of balance that out. So Margaret was saying Devon. So here's DVN, Devon Energy. I had Gazprom up here. Let me bring up Gazprom. One nice thing about this platform is you can bring up markets from all over the world. So GAZPROM. So there's Gazprom. You can tell it's had a huge run, and that's in rubles, so I don't know what that converts to dollars, but it's gone from about 150 up to almost 400 in just a month. This is a weekly, so that's almost a year. So just about a year, it's up over 100%. So pretty impressive runs in a lot of these. And, it's great because if you look at something like XLE, I'll bring XLE up here for you. Obviously, we're focusing on natural gas, but we have seen pretty much the entire energy sector really have a great probably about a last month or so has been great for energy overall. With these companies that John was talking about, if you look at your Chevrons, your ExxonMobils, the ConocoPhillips, which are the big dogs, right? Here's XOM. So you can see ExxonMobil's moves for the past, this is a weekly chart, by the way, so I'll just show you from, let's say, 2018 on. You look at CVX. All right, they've been doing well certainly over the past few weeks, and here's COP, ConocoPhillips. They've all been doing rather well, and all of those companies have some exposure, although they're probably more diversified than somebody like Cheniere or EGT. They're going to be in more categories of energy, whereas I can't even pronounce Cheniere, right? Is it Cheniere?
Cheniere, yeah.
Cheniere, right? I'm calling it the Sea Dog. Sea Dog, that one's more focused on natural gas, whereas some are more diversified. So when you're looking at investments, it's kind of a way to hedge, I think, a little bit. If you go, I like natural gas, but I just don't want to put all my eggs in that basket. All right, maybe I move to somebody who's got a more diversified portfolio.
Well, like Cheniere, I mean, I bought a lot of calls. I did some call spreads a few weeks ago when it broke out. I was waiting for a dip, and I missed the dip down around $80, and when it got above, let's say, $88, I bought some 90, 100 vertical call spreads, and then popped, and I was in and I was out, and so I'm looking to get back in, and if you look at the chart, there's a little gap down there around 95, and you could look for a demand zone. I think somewhere around, I think it's around 92, 50-ish, 93-ish area. I mean, I don't know if we're going to get down there. I'm kind of hoping we do, right? Because I really do believe that in the long run, like I said before, I don't think this is going to go away. I think this is a dynamic change and shift in the way our domestic natural gas market is. And even if we stabilize, if we have alternative fuels that brings our natural gas price down, as far as Asia, and we haven't even talked about the Asian part of it in South Korea and Japan, where they have no natural resources, right? They bring everything in. I think this is a mega trend. So, and we'll go back to think about it. If the market is selling their poop bags for $25 a pop, and they only they get the stuff practically for free, that's a lot of money. Yeah.
So focus on those. Real quick, since we're on kind of the energy topic, we have had some pretty nice moves in crude oil. Now, there's all this talk about OPEC, et cetera, but we've broken above some pretty solid resistance. The overhead supply, I was actually feeling a little bit bearish on it, but we ripped through, so now it's back to bull mode. We're closed at almost $80.50 today. Been a gorgeous couple of months here for crude oil. What's your thoughts on that trajectory? You see it continuing on?
Yeah, I think this energy crisis, the supply problem that was brought on by COVID, and again, lack of capital expenditures, shut-ins, and just parts and pumping and supplies and all these things that we're hearing in all sectors of the commodity market is affecting the oil market. But I really think the play in the energy market now is the monetary. And as long as this fiscal monetary, the Fed pumping liquidity into the market. So I think the key for crude oil is watch the dollar, right? If the dollar gets weak, I think that could push crude oil prices to $100 easily. If we see, rates, inflation continue, then again, I think that will bleed over. Now, what will happen, I think, is as we get to a certain level, and from what I hear, is above $70, above $75 here domestically, in the regions that produce oil here in the U.S., that the capital will come back into the market. In other words, they'll just start drilling it more. And I think if you see domestic production in the U.S. start to rise, which would send a message to OPEC, which I think they basically killed our domestic market.
Yep.
I think OPEC will come back in and raise supply to drive those folks back out. So in that scenario, then I think you could see the market fall back or at least stabilize. But, I'm hearing, for Brent, $86, $88, and for us here, $82. So I think we're at the very high end, maybe another 10% or so, or maybe 15%. And again, I think the next leg will come from the monetary aspect, depending on what happens with inflation. And if we do see that reopening scenario, let's say we get jet travel. I heard that some of the Asian countries now are allowing international travel. So if you see that, jet travel internationally start to pick up, you see global economies start to pick up, then I think, $100 is definitely in the cards. But there is a lot of folks that are saying that places like China and other places around the world that global economic activity is actually slowing down. So I think we are probably closer to the top. And, I think time will tell. Seasonally, though, too, we're coming into a season when crude oil prices tend to kind of fall down as well. So we'll see what happens.
Okay, cool. Well, while we got you here, I know you were doing a bunch of stuff with barchart.com. You got any upcoming webinars, some events that these guys can join you at?
Yeah, every Wednesday at noon, I do a weekly webinar, and we do a variety of subjects from all the different asset classes, stocks, options, futures. So the up and coming one, I don't have one this Wednesday, but next week we're going to look at market sentiment and momentum, and we'll look at things like the VIX and the put to call ratios. We have a proprietary index of our own. It's kind of a breadth index, which is kind of cool. It really kind of shows you intermarket momentum, on a day-to-day basis, and kind of give you, if you get, let's say, a breadth indication to the downside, oversold, and it falls into, let's say, a demand zone, or you do your other, market analysis, you look at RSIs or MACDs or something like that, and then you use our proprietary index. When they all fall in line, they really give a high probability trade. So that one's pretty cool. And then we'll also, one of the features that we have on bar chart is we do have insider trading. So you can look at what's going on in individual companies, who's buying and who sells what,
Yeah, let's clarify that one real quick. So insider trading means who inside the company is buying and selling, not, hey, here's some knowledge and information that nobody else has because you're going to prison. Let's be real clear now.
Exactly. These would be filings of the captains of the industries that are. And so really the sell side, we're not really that concerned about. I mean, there are opportunities if you know what you're looking for. But what we'll look at is let's look at buyers, right? And one of the ones that I was looking at just recently, I think the chart was GRPH graphic or something. I can't remember what I saw, but over the last week, every day filing, they bought about $1 million worth of shares every day for the last week. And that's significant. And if you look at this, the stock price, it's come down from its peak in August to a stabilizing level. So that's kind of telling you that the insiders, in other words, the people that are in that industry or that stock, are saying, hey, our price is too cheap, and we believe that things are good and prices are going to go back up. So that's kind of the things that we're going to look at in that webinar.
Nice. You had the website up there, guys. Let me go back to that picture. If you go to bar chart and click on tools, you'll see there's the things that's free webinars. There's all kinds of different stuff that you can go through, but the free webinars is where John's doing a whole bunch of webinars, and I think a lot of these are archives of his previous ones. You can click on any of these. There's a lot of great stuff there for you to learn from, and as G.I. Joe says, knowing is half the battle. So hopefully you can learn from Mr. Rowland and others, and hopefully put your A game first. All right, John. Well, hey, man, thank you so much. I appreciate the short notice. I'm glad you're back. I'm glad you had a good vacation, but let's get back to work, man. Come on.
I don't know, man. I like this vacation stuff. It's pretty cool,
well, I tell you, I was watching, there's a guy I follow on social media, and he does a whole shtick where he has a spreadsheet, and he itemizes all these different countries, and he says, here's how much you need to live or to retire in these countries, and basically live off it. So if you had X amount of dollars, he does it all in cryptocurrency. So you had X amount of cryptocurrency, you could live here for the rest of your life and really not have to do another thing. So maybe I'll send you that link. You might be interested in that one. You got grandkids, though. You can't leave.
No, I can't. Listen, I don't have a retirement plan. I have an expiration plan.
Oh, wow. All right. Well, to each their own. I'm all about a retirement. It's true. Retirement.
I think I'm stuck working until the day I die. I don't know. That's just kind of my character, I guess.
I'm there too. It depends on what your definition of work is. I'll be doing something that I enjoy. I may not be getting paid for it, but I'll do it just. To me, is that work really? Well, I don't know. But let's go find a nice tropical place to do it from.
Yeah, working for Bar Chart and doing these weekly webinars is a lot of work, but I really do get a lot of enjoyment out of it. And I feel like, the things that I bring to the table, to help our retail investors, the folks that you talk to on a daily basis. Yep. And again, I got to give you props. You do this every day. I only do it once a week. I really feel that the message that we're putting out, and I see the stuff that you put out as well too, and kudos to you, that we're making difference in people's lives. Right? Yep. We're not out there to sell something. We're out there to give them the truth and tell them what's really going on. So I'm proud of the work I'm doing, and you should be proud of the work you're doing too.
I am. I love it. And there's for me, this, like I said, there's not really much of a financial reward, but life's not all about money. It's about giving back sometimes. So I make my money on the other things I do, so that's good. But
we make our money in our trades, right?
That's right. Trading, investing, and all kinds of other, wherever you can. I think that's one of the things that you learn over time is that you shouldn't have one source of income, right? You should be having multiples, whether that's full employment or trading or residual income or dividends or things like that. To me, it's you build as many different channels of income streams, and ultimately then you'll be set at a certain point where those income streams will just pay you whatever you need. So that's how I'm doing.
Right. So since I have you on the phone, let me pick your brain real quick. What do you think is going on with cryptos?
It's broad. I mean, you're painting a broad brush there. I'm very optimistic. I love that China banned cryptos. I think that's absolutely fantastic for the crypto space. You basically have China pushing all the innovators in technology out of their country, which has just got to be one of the dumbest things ever. And now they're coming to other places. And I'm very optimistic that the U.S. will not over-regulate it. They're going to tax the hell out of it. But I think that they see the innovation side, and that could put us in the driver's seat as being a leader in blockchain technology, digital assets. I think the opportunities it presents for trading and investing are huge. So you spent time on the floors out in New York and other trading floors. Imagine if all of a sudden people didn't need those trading floors at all. They could do totally decentralized marketplaces. You save costs. It's more efficient. It's more transparent. And that system, that ecosystem, to me, is getting bigger and bigger every day. And you're seeing more decentralization in insurance, healthcare, in just services industries becoming more decentralized. And when you decentralize things, more money goes back to gets away from these centralized entities that control it all. So I'm a huge fan of decentralized marketplaces. It's not just cryptocurrencies, though. I think that's a pigeonhole that gets people think it's all about just money and Bitcoin. It's not. It's so much more than that. There's technologies happening right now that to me are absolute game changers. So obviously I'm pretty excited, and I'm hoping that the U.S. will lead the way and not stifle innovation. We'll see what happens in the next few months with regulatory issues, but right now it's pretty amazing. I think in about 5 to 10 years, people will look at banks and go, "What was I thinking? Why did I use my Chase Bank? I am my own bank. Screw them." Hopefully in the future we'll see more of that.
It's certainly a disruptor technology, but I think you and I have had this discussion about, in any revolution, there's always some kind of a war, and that the powers that be that are in control don't give up control easily. So I'm always concerned that you talk about regulation from the central banks or from governments, that the pendulum could swing very hard one way and could
it could, and we're still going to wait to get what the quote-unquote official definitions are of a security, of a currency. But, for me, when we get those definitions, and that's what the SEC is fighting with Coinbase and Ripple and other companies on, and Celsius. What is a currency? What is an asset or a commodity? What's under the purview of the SEC or the FDIC? And if we get clarity there, then all of a sudden some of these assets will go mainstream, right? Because they're not going to say, well, they're nothing. They're going to go, well, it's a currency, or this one's a security. Well, if it's a security, then we get SIPC protection. If it's a currency, then we get FDIC protection. So all of a sudden, why do I want to keep my money at the bank, to $250,000 a year, getting 0.1% interest, even though it's protected? I mean, I've got stuff right now making 14% per year. Okay, I could go to a stable coin and be getting 10% per year, which is the same thing as holding US dollars. So I think more people wake up and think, why would I want to keep it at a bank if I get the same insurance protection from my government? It's going to upend the financial institutions big time.
I agree with you if that's the path that we go. But I think there's a lot of hurdles and pitfalls that need to be discovered before we can get there, though, too.
That's true. And the truth is, the vast majority of these cryptocurrencies are pump and dump scams. They're absolute. Yeah. The term shitcoin is very appropriate. They are absolute shitcoins. And I mean, if you look at just some of the names, I curse every now and again on the show, and I apologize for that, guys. But some of the names of these cryptocurrencies are like bad porno names. I mean, it's awful what some of the names are, and they're just there to get a pump and dump scam out of people. It's like, just go with the stuff that you research the projects and you think that there's a future in it. So,
did I hear that they made a coin based on Elon Musk's dog or something? Yep.
And not only did they make a coin on his dog, but now there's a baby Floki. And they have all kinds. They immediately can take that and create all these crazy little replicas, and they're hoping that the hype from his coin will skyrocket it. It's so stupid. It's the greater fool theory, and it's hard to have an intelligent conversation with some people. And again, this weekend, people were asking me about Shiba Inu, and they're all like, "Oh, you got to buy Shibu, man. It's going to go to $1." And I just keep shaking my head going, "Gee." By you saying Shiba Inu is going to go to $1, you're affirming how stupid you really are. You just don't understand basic tokenomics or how money works in the financial markets. Again, if Shiba Inu got to $1, it would have a greater market capitalization than it would be about $2 quadrillion market cap. A quadrillion. That's going to happen tomorrow, guys. Anyway, we could go on and on about this, but yeah, man, I'm optimistic, man. I'm invested in it, and it's been doing very well for me. And I've had some losers along the way. I've had a couple bad losers on them too by buying shit coins, but for the most part, my portfolio is built for the future. And I think 5-10 years. I think in 10 years we'll look back and it won't even be a question of cryptocurrency and digital assets. It will be synonymous with money and securities. Period.
Or the central banks, if you can't beat them, join them, and they adopt them, right?
Yep.
So
they will. I mean, the Fed is going to come out with a central bank digital currency, CBDC.
Yeah.
I mean, they have to.
They already have it.
Yeah, they already have it. It's just not fully implemented yet. But we'll be there, and I think, guys, that will be. In 5 years, we'll all be using the CBDC, which will probably be the Fed coin. In 10 years, I really don't even think you'll have physical money anymore. I think it's going to be 100% digital. You won't have dollars and coins. It'll all be digital.
Well, that way they can track every transaction then, too.
And control it.
Right.
Can you imagine,
exactly.
if you imagine your tax return gets sent automatically to your FedCoin account, right? And you got it on your phone, or at that point it might be an implant in our ear or something, but it goes straight to your FedCoin account. And if they decide to freeze your accounts in 1 second, They click a button and your account's frozen. It's like, well, wait a minute.
Right.
I didn't do anything. You didn't pay your taxes?
Yeah,
well,
that's
there
the
you go.
Scary part, Merlin. That's the scary part, right? They could tell you where you and when and how you're going to spend your money too.
That's right.
So I mean, that's.
You remember Wesley Snipes got tax evasion, right? He had the big old tax
yeah,
evasion
exactly.
thing. They just hit a button and everything's frozen. You can't even buy gasoline. I mean, you're screwed. I don't know. There'll be a black market. I'm hoarding $100 bills because I think there is going to be a black market. You know, like a Mad Max scenario. We're like, hey man, I'll give you a gallon of gas for a $100 bill. All right, here you go. Black market dealings. Oh boy, we could go on and on, John. Maybe one day we'll just have a candid, just random go down an alley show and have some fun with that one. I think we could have some fun with that.
The rabbit hole show.
The rabbit hole show.
I love it.
I might need to do a once a month rabbit hole show. No plan, no nothing, just go down there.
Just free ball, right? Just
we'll do it.
Form.
All right, man. Well, hey,
thanks for having me, my friend.
Pleasure. Love having you on. Always great and informative stuff. Thank you so much. Take care, my friend. We'll see you hopefully in a month or so. Take care. Guys, that was John Rowland of barchart.com. You can go check out some of his webinars by going to barchart.com. We were up there earlier. If you click on the dashboard piece, you'll see there's one that says, tools piece. It says free webinars. And of course, there's all kinds of stuff over there at Barchart, but John works in that free webinar department and creates a lot of great content for them. So check that one out. And you have a great resource at your disposal right there. Tom says, I learned from Nancy Pelosi and her husband. Wouldn't it be nice? And again, we should pass this rule that if every politician's account should be transparent within, let's say, 1 week, right? So if Pelosi, that's fine. Give them a week head start. But if Pelosi's loading up on shares of Apple, and I know there's a major, antitrust vote going on against all these big tech firms, and she's buying Apple, I'm pretty sure that vote's going to get shot down, and they'll be okay. Buy me some Apple on Facebook. Buy that FNGU, right? Buy that triple fang long. So, I wish that all politicians had a fully transparent portfolio that we could see. Not only that, central bankers. You name whomever, any major political official. Give me transparency and everything. All right. Let's see, where are we at? Holy cow, I don't even have time to show you the economic calendars for tomorrow because I didn't take the time to put them up. Earnings-wise, we really don't have anything. I believe Fastenal comes out tomorrow with earnings. The reason that's important is because Wednesday, all of a sudden, we have a huge influx of major companies reporting earnings in the banking sector, which I'm excited about. We'll see how that sets the tone for earnings. With regards to tomorrow, October 12th announcements, you have JOLTS job openings, the NFIB Small Business Index, and that's pretty much it for the U.S. If you're trading the British pound, you do have GDP numbers coming out, and of course, if you guys have been checking out that GDP, let's check it out. Here is your British pound on the daily. It's been drifting down. It bounced off that little demand zone way down there. Not even a strong one, but a little bit of a bounce. Right now, still in that little downtrend, but we'll see what the GDP numbers post for the UK. It also has index of services and production and manufacturing, so a busy day for the UK. US, not so much. And then I guess maybe if you are trading the euro, which I will bring up the EUR USD for you guys, which has just been drifting lower and lower and lower. I actually have a zone drawn over here. I'm not sure what that zone is from, but I could probably zoom in if we wanted to. At 2 a.m., Pacific time, you have an announcement from the European Union, and that's going to be the ZEW Economic Sentiment Report, which is a pretty popular one over there. All right, that will do it for today's show. Tomorrow and Wednesday, I have no guests yet, but I will have Brandon Wendell on the program on Thursday. So that would be good for you guys to join us for that one. Brandon always has some great analysis and chart stuff. If you have comments, questions, feedback, you can send them on in at tradermerlin@gmail.com. Since I don't have a guest tomorrow, most likely I'll be doing a bunch of listener questions. So send them on in, tradermerlin@gmail.com. If you like today's show with John Rowland, you can give us a thumbs up or check him out at barchart.com. Until then, happy trading, everybody. I will see you mañana.